This is Just Amazon. On Tuesday, March 19th, 2019, we've got yet another bullish retest gap. It's gapping up. It's clearing the highs of yesterday, starting to pull back a little bit. It'd be great to have a pullback into 1747, and we don't get it. We go right into racing higher, making a high that contends with pre-market, and then just continue to grind higher. It does this all morning, going sideways after this initial run-up. And it actually gave a pretty good opportunity to get in bullish. There's some really small candles here. People are thinking, okay, this is it. It's going to roll over because small candles, remember, rolling over. Those look kind of similar. There's only a few of them. Let's see if we get more. Nope, there's the pullback. People are loading up. The bears are loading up, thinking, okay, that's it. Can't go any higher. Again, a nice small candle above the 21 and a bounce. This is not the right position for a Morningstar reversal, but that's essentially what we've got. This is one of those false rollovers that we started to see, early afternoon yesterday, where it started to maybe go down and immediately just got bought up, and that's what's happened. Pulled back a little bit into this indecisive candle. These couple of them here, and we do actually have a squeeze that pushed us a little bit higher here too. Here we go again, small candle, small candle. This looks like an evening star reversal. There's not much of resistance here other than 1780, the price 1780. There's some news thing that happened today, and this actually, we're hanging out right here. 1780 is the high, and all of a sudden we push low. Oh, no. There we go. It was not 1780. We actually broke above that. Some news thing happened today all over the markets, and it shot lower and looked like there was a great opportunity to take out a low, get in bearish, similar to how this moved a little more bearish. It didn't really do that today. I'm sorry, I misspoke thinking it was happening at 1780. This just grinded higher. This one grinded sideways, then bounced. This one gave you a little bit of an S-curve and then just grinded higher. And at this point, it's looking a little more bearish. And what happens? We start to rally. Not only do we rally back up to our high, or back up to 1780 here, we actually make a new high on the day right here, 1784.16. 1784 was the high we're holding through here, 1784.05. Made a new high, and there was somebody buying on this candle at 1784.16. And that's as high as we got today. So this looks like a double top, kind of lopsided. You had kind of the second S-curve, first S-curve here, second S-curve here, and this was a place to actually take the evening star reversal down. Just like you could have worked here, you just didn't know what was going to happen there. This one, you could have been anticipating or setting it up to think, okay, if we get back up to this price, that's the right place to get in for rollover. And boy, do we get a rollover. No, not yet. Comes right back down to where we S-curve, start to S-curve again, bulls are getting on, and we have another evening star reversal. So I'm going to zoom in a little more on the day here. You get indecisive candle, throws a nice upper wick. It gets really close to the candles, the prices here and here with this high. And, with the evening star reversal look here, which also could be maybe a double top like this with a neckline here, a little bit higher than this one, a little more aggressive than this one. And we just go sideways. We chop through here. So this is where, bulls and bears are just fighting this out, looking for another move higher because that's what's been working. And we just go, let's see, over half an hour, 40 minutes or so, sideways. And then we start to break down, taking out the low. This is where you could have just waited to get in bearish if you didn't want to be aggressively shorting it up here. We've still made higher lows on the day. We've actually made a higher high on the day, and something just wasn't right at this point because, this kind of flat, I don't want to call it a flash crash because it didn't do that. This flash lower because of some news event and subsequent recovery. And here we are, breaking down from where that had recovered, breaking down below this S curve. Something has changed on the day here. The first kind of signal that something was changing is maybe taking out this S curve. Maybe that's where you want to tighten up your stop. If you were getting in down here, that's where you kind of tighten up your stop after it does this to here, and then once it does this one to here, and just play it a little more aggressively. Well, now that stop's been taken out. Bulls that are still in this from the day, from previous days, if you're watching this on a 5-minute, that's a great place to put a stop because it held here, and it hasn't really given you any more opportunity to move your stop tighter. So a lot of stops are here, and then there's a lot more here and a lot more here, and those are our next targets on the way back down. So take out some stops, recover, look like we're going to go back up, and have another evening star reversal, start to roll down, and we've got the squeeze that's fired bearish now. We were riding on the 21 and the 5 through here. Now we've got the 5 below the 21. We're almost to take out some more stops here on 1771. And we do that here. So again, we've got S curves on the way down, just like on the way up. We have some nice upper wicks, some nice selling off the 21. And this one now is taking out this low. So the next one we're looking for is 1765. And we get there pretty quickly. We actually, shoot down pretty quickly here. Like this is 30 minutes of selling. We haven't had 30 minutes of selling in a while. So this is kind of, if this wasn't a shot across the bow, this is just the idea that, okay, we can't just keep going higher. That's been working. On the 5-minute, it's not, obviously. Get a small candle on here, get a little bit of a buy. Actually, pretty aggressive buy, 5-minute candle. I think this is pretty close to Marbozu. The open and the low, the high and the close are the same price. So, almost a $9 move just being bought straight back up. And we're almost at the end of the day. And we, kind of just roll back down here. So after hours today, we've gone a little bit sideways to down from where that close was. But just like we were looking back here where we had, kind of this double top thing happen and didn't really play out the next day. We could have another day like these two where, we've got these bigger moves. Maybe we do something where we move back up there and then roll back down. But this is kind of the first bigger pullback I feel like we've had on the day. That much bearishness coming in. And it's a good place to sell. I was saying that yesterday, where there's some good targets in here, and it doesn't have to keep going higher. And now it has, but we're in this no man's land, and we're in this area that there's a lot of resistance. There's a lot of bears that had started the moves lower from up here, and this is one of those opportunities for the bears who are selling here and here and here to do it again. And so this is going to be a good area with a good place to chop around, a good place to tighten up your stop, and just kind of wait out some of these and really, drill down to the 5-minute to see, okay, how could this move? Where is my risk going to be? If it does something like the 5-minute did today, where it's just grinding, and you're not paying attention to it, where are you going to put your stop that's really going to get you out before it does something a little more drastic like this? If your stop was here, right below these lows here, you got stopped out on this candle, even though it looked like there could be some buying coming in, so, maybe moving your stop a little bit lower than where you would typically put it, than where the candles say to put it. Obviously putting a stop anywhere below here and not moving it the rest of the day, eventually, it came back. Amazon came back down and took out those stops. We didn't quite take out the low of the day, which I thought was interesting. That we still had a bullish candle on the day, just not really looking like a very strong bullish candle. We've got a very small lower wick. No, we don't. I'm sorry. The low. Oh, the open and the low are the same price. That's not what the 5-minute said. Interesting. Okay, I'm not sure how that works. So the open and the low are 40 cents apart from each other here, but on the daily, the open and the low are the same. So it's a shaved bottom. That's really interesting that it's a shaved bottom, inverted hammer. Everybody who, according to the daily, everybody who was, um, getting in on this was going bullish right out the gate, and that would just kind of open the door, I guess, for a gap down below this, trapping any bulls from today, starting to fill this gap here. It kind of suggests, okay, there is some bearishness that could come in, especially down to the 5, the 21, any of these lines in here. Now, I'm not saying it's going to do that. I'm not saying it's going to go bearish. I'm just saying the door has kind of been opened up for a move lower here. Especially if you look at this, the move we've had here, where we kind of had these rallies higher, consolidate. Today rally higher, consolidate. This one looks like a bigger double top that's retested, not quite up to the neckline, but retested to kind of a last one of the last S curves back up. So there's just a little bit more, just opens the door to a little more bearishness. Now we could totally gap up. We could, do a gap like we did today, where we actually rally above some of the selling here. Yes, from yesterday's highs, where bears were coming in, they were all trapped this morning. This was a great gap on a 5-minute. Right out the gate, because we're trapping so many bears from yesterday, thinking that was it. We could do the same thing again. We could trap a bunch of them if we get back to 1780, high 1780s. I don't know if it's going to do that. The look of it today, is similar to going the close, just going sideways. We really did that. I just feel like there's a little more bearishness that's come into the end of the day today that we haven't seen since maybe this day, and we gapped up above that and had that choppy open. That was last Friday, right? 15th. Yeah, that was last Friday. Before that, we really didn't have as much bearishness to close the day in a little while. Maybe probably this day. What was this? 7th, Thursday, I think. So that was that day. Yeah, that was this day. So, there wasn't really anything bullish going on with that. It was already starting to show signs of bearishness, but that's kind of the last time we had a 5-minute that looked like, part of today's sell-off. This looked like the sell-off, the pullback we got today to close out the day, where this just kind of ran lower. So there were opportunities to play this both directions. There were opportunities to buy right out the gate into the 21 here. This was a little bit harder to buy here, just because it didn't really pull back to the high it was making earlier in the day. But if we look at the 1800 calls, that had some nice value to it. You could have been buying out the gate 4 or 450, maybe even 5 by 4. But then that just went sideways here and gave you an opportunity to pull with a pullback into that 21, or a little bit above the 21. Getting in around $6, that was the lows through here. So 6 by 5, 650 by 550. And then that rallied and gave you this S curve. This is the one that you would have had to been watching the option price to buy off of this pullback. It didn't give it to you on the stock pullback, but it gave it to you on the option. So let's see, probably 8, 750 or 8. So 750 was the highs here. It didn't pull back to 750, it pulled back to 71. So this is one that maybe once it put in this candle, setting it up to buy 8 by 7, but that 7 was here. So this would have been much harder to buy. Like I said, the better buys were down here. And as this consolidated, gave you some smaller candles here, like this one, 40-cent range, and then this flash pullback, not a flash crash, flash pullback, gave some opportunities to buy around 8 by 7 again if you had missed this one, or were eyeing a pullback similar to this one again. Even taking this little S curve here around $9, 10 by 9 looks like it could have worked because it didn't get up that high here, but it didn't get up to 12. So you would not have made 2R in that, but you probably would have been taking some profits as it moves right back up into that 1784 price on the daily or on the 5-minute stock. As we get through here, you're getting some more opportunities to buy, like the $7.50, $8 price, but they just don't go anywhere. And there's enough signals here to say, okay, maybe we're going a little more bearish. If we switch over to the puts, this was kind of your warning shot with the puts. So this is the 1750 puts. They had a really nice rally here on that flash pullback. Excuse me, that flash pullback. We pulled back on the option into the same price range here. Didn't get a low of 625 again. We got really close, 630 here. All of this, seeing the move we had here and the potential for some rollover, anywhere in here you could have been getting in 7 by 6 on the 1750 puts, and that would have had a great move. Even this, as it started to break out on the puts, pulled back into 7 again at 210. Oops. 210 here. Was that this? Yeah. So even that's the really cool thing with the puts. If you're really good at waiting, or any of the options, not just puts, but in this case, if you're really good at waiting, that's what you got to get good at. You see these highs. This is not the place to buy the option. You'll have another opportunity. It moved down sideways all the way over here. I mean, you could have had it set up here or here to be buying the same price of the put here. But if you want to buy a put and you can get it at the same price here or here, this already gives you some more confirmation that it's starting to roll down. You don't have to be getting aggressively bearish up here where it's not really signal. You're taking that risk of, trying to plan for it to have that kind of move. Not to say that that's not a good place to get into puts. You just want to get into the right puts, and the $100 risk puts, it's better to get in down here than it is up here because you're taking that chance. So that would have been somewhat buying blind over here, getting in some lows, 630, 650, something like that. In this case, it worked. But like if we looked at the 1775 puts, let's see what was going on here. So those put in a low of 14. I guess that probably would have worked here too. 14, 15 by 14, something like that. It's possible that those would have worked. So it's just playing it much more aggressively down here. And, you got to know your levels that you could take out some of these lows and, easily get stopped out for your $100 loss. So this would have been a great place to be buying through here too. I'm just looking at this. It's like, man, the 1775, because you're out of the money, you're coming right back into the low. Like, look at this, 1406 and 1400. This was probably the best option to get into, the best puts to get into, and just have a trade set up to get in, somewhere, 1465 here was the low. So 15 by 14 after it does this, or getting in at 14 because it almost made it there, and just holding that. The tough part would have been holding that, being patient, letting it play out as this move happens, and then it starts to pull back on the option, waiting. Like if you had gotten out here, which is almost to another high, like gotten in at 15 with a stop at 14, getting out here at 18, you missed the move up to 26. Not to say it had to happen, but each of these on the 5-minute here, each of these bearish candles were taking out these lows and we're showing things to be a little more bearish, opening the door for that bearishness to come in all through this. And, if you're in the right puts, it worked. If you were in puts that were really far out of the money, 1725, maybe that didn't work as well. 1750 worked a little better. 1775 worked really well because you went from out of the money up here to this kind of retest where you're out of the money, and then also in the money for 30 minutes, moving solidly bearish. And this is where you want to be. If you can watch this happen, this is where you want to move your stop or move your target a little further away, because it's just starting to go. This is one of those rollovers that once it starts going, it's going to build up that steam to continue lower. And your stop, you can be chasing these highs with your stop on its way down, giving it a little bit of room, maybe playing it with, if you got in, let's say you got in here, move your stop above this one after this candle comes in, move your stop above this one after this candle. You're putting your stop maybe 5-10 minutes behind where it's at until it gets to the point that it's like, okay, I'm taking out some key levels here. I've got, 10, 15, 20, 25. I've got 30 minutes of selling here. I haven't had this in days. This is a good place to take a step back and be like, I'm going to take some profits, or I'm going to exit the position because I'm okay missing another $5 move down or taking out the low of the day. It doesn't have to get there, but that's where you got to build that mental muscle to wait on these things, because that's where it could really start moving in your favor. And like I said on the puts, if you got in over here at like 15, anywhere in here 15, you're barely up right here, but that's just where it starts, and it moved 10R, pretty quickly. In 30 minutes, it moved 10R. So that would have been a great place to be buying in here. That would have been a great trade. Even the 1750 call, 1750 puts, those went from 7x6 up to 12, 13. So, not as many R's. Probably would have had a target somewhere in here around 11. So 7 up to 11, that's still 4R in 20 something minutes. That's still really good too. So anyway, a lot of opportunities, both bullish and bearish today. And, we'll wait and see what happens tomorrow. If we do any sort of rallying, see if we can get into any of these resistances again, or if we can get up, retest any of these levels and start to roll over and play some puts coming back down. So could go either direction. We could also just go sideways, have an inside day, and then from there do something like this where we have another gap up and get up into the 1800s. That's not out of the question either. That would trap even more bears because there were so many bears who got on today going bearish. Let's see, our high here was 1784.16. We're above this one, 1784. We're actually above this high from November. This high from October, well, not that high from October, but this high, we're still below this one. But that's pretty phenomenal that we took out this high. And I'll go back a little bit here because I remember thinking when we were taking out these highs, it's like, this really shouldn't be up here. This is bulls continuing to buy, even though it's clearly losing its steam. And it feels like a little bit of that here. This is not the place to be buying up here. Not until you get a dip, pull back. You've got this whole range, like between here and here. There's been a lot of selling over the last 5 months. Please be careful with your risk, that you've got the right amount of risks, and the day trades, just so you have your stops in the right place. Swing trades, this is probably not the place to be buying right here. But you gotta, if you're gonna play it aggressively, be ready to be stopped out. It just feels like we shouldn't quite be up this high, taking out a high from November. I mean, it's great we're taking out that high. I'm not saying it can't definitely go higher. I just would like to see a little more of a rest before it continues to push that much. The squeeze, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We're 12 candles into the squeeze. we don't necessarily have to be done here either. Is that 12? Yeah. We've got definitely bullish volume, that's been involved with pushing this higher. We had a lot of bullish volume. No, it was before earnings. That was the last time we had that really high bullish volume. But we had this lull of just going sideways where we had low volume, and we're really starting to see some volume come in. I just don't want to see people stopped out of this on a pullback that could do something like this just to see it rally again. And so that's kind of the risk right now that I'm seeing, is that there's a little more of a door opened up for some bearishness to come in, which means more people could be stopped out, trapped, losing more than they wanted to. They're buying late to the party, that kind of thing. So let's just be really aggressive on the 5-minute and look for those opportunities, both bullish and bearish. But I've got my eye a little more bearish on the shorter term here. This may have been it today. We'll see if we can get a gap up or get into some of these levels here. Seen a little bit of a channel here, 1784 by 1772. If we can get up to that or get into it and then roll over, that'd be a good opportunity to take it bearish, similar to this from today. So I guess we will just continue to watch and see how this plays out. Looking for those trade opportunities and looking for $100 risk. So I hope you enjoyed this video. This is Just AMZN. Thanks.